and welcome to this June 29th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring a $5.9 billion company in the consumer discretionary space. This has not been a great area of late over the last month or so, but CTRP, ticker symbol CTRP, is based in China, so maybe that will help in terms of performance. Looking at the sector before we get into this chart, the ETF that tracks the consumer discretionary group is the XLY, and there's some pretty good price support on that ETF right in the 1545 to 1560 area, and we finished right in that range at the close on Monday. So what we wanted to do was take a look at potential discretionary stocks that might perform well if we bounce off of this support area. Obviously, if the support area doesn't hold and the discretionary group breaks down, then you've got to be prepared to cut ties with some of the stocks within the group. But CTRP actually looked pretty interesting. You can see that after a nice move up back at the end of 2009, we started to consolidate, went sideways for a while. Notice the ascending lows and the equal highs. That is an ascending triangle, which we were mired in for about 4 months, finally breaking out about a week and a half to 2 weeks ago, taking out the $40.75 to $41 level. Notice on this breakout to the upside, volume was confirming, MACD was pointing straight up, RSI at the time of the breakout was probably in the 50s, stochastics probably maybe 60, 70, somewhere in that range, and the stock ran for another week or so, getting up to about $47 before pulling back. Now over the last 5 days, we've seen CTRP pull all the way back, closing on Monday at $42.77. And I see a couple of good entry areas on the stock if we continue to pull back. First is going to be the 20-day exponential moving average. Anytime you have a moving average convergence divergence that's looking this strong on the most recent high, when we printed that high, the MACD was pointing straight up. Normally when we get back and test that 20-day moving average for the first time, it generally will hold. But just below the 20-day moving average, you've also got this major price support area. You can see we had struggled to break through this $40.75 to $41 area on numerous occasions, finally doing so a couple of weeks ago. We have not yet gone back to retest this area. So you've got the 20-day moving average sitting at 41.48 and rising each day, and then we've got price support from the breakout a couple of weeks ago, which now sits between $40.75 and $41. So that's the area that I'd be looking for as possible entry. To the downside, a close back below the 50-day moving average at 38.70 would be a warning sign. And if the whole discretionary sector breaks down and we see that XLY falling below 15.45, you might even keep a stop just a little bit below this 40.75 area, maybe 40 to 40.50, something in there. And not give it a whole lot of room to the downside. So overall, I think the volume trends, which were super on the way up recently, on the selling the last few days, it seems like it's just more, it was more of an impulsive move to the upside and much more corrective to the downside. You can see the volume much lighter as the stock pulls back. RSI and stochastics both were overbought, and the recent selling has helped to relieve both of those. So I think the stock looks pretty good. It's really the overall market that bothers us. Keep an eye on the 10-year Treasury yield. That was breaking down or threatening to break down at the end of the day on Monday. If that breaks down and we start to see consumer discretionary also breaking down the XLY, it's going to make it difficult on a lot of stocks. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.